Welcome to Alpha Insights. I'm Sydney. Today we're unpacking a fresh batch of state-level news that's been creating headwinds for the cannabis industry. With me is Josh, who tracks policy shifts and market history. Remember, if you have questions as we go, you can ask us at stockalpha.ai. Quick housekeeping. Markets were closed over the weekend, so these stories will be reflected in prices when trading resumes on Monday. As of Friday, February 6th, investors were heading into the long weekend watching these state developments closely.
Thanks, Sydney. Good to be here. There was a lot to follow over the last couple of days, and a bunch of it centers on regulatory friction rather than any one business surprise.
Let's start with the big one in Arkansas. Walk me through what the court decision means and why it's such a shock to the market and patients.
Sure. In short, a court ruling in Arkansas opened the door for lawmakers to roll back medical marijuana access, potentially even retroactively. For patients, that's a huge deal. It can interrupt care and access overnight. For operators, it threatens license values and local sales that had been treated as stable. From an investor perspective, it raises state-level policy risk. A market you thought was set can suddenly become uncertain, and that can pressure companies that are concentrated in that state.
So this isn't just a local story. It changes how investors should think about state exposure?
Exactly. Cannabis is very much a state-by-state business in the U.S. A shock to one state's framework can hit revenue forecasts and the perceived value of local licenses. If you're holding names with meaningful Arkansas exposure, you need to ask whether you want that concentrated political risk in your portfolio.
Florida had two developments, a bill about open containers and a failed ballot push. What's the practical impact there?
Florida is a large potential market, so these are meaningful setbacks. The open container bill applies alcohol-style rules to cannabis in vehicles, which increases enforcement risk for patients who carry product in cars. Implementation and local enforcement will matter a lot, but it does raise the bar on everyday use. On top of that, a drive to put adult use legalization on the ballot fell short of signatures, and the court declined to review the ballot language, which complicates the path to statewide adult use in the near term. Put together, it cools some of the optimism investors had about near-term Florida upside.
Maine had a different outcome. A repeal effort failed to qualify for the ballot. How should we read that?
That removes a big near-term downside risk for operators in Maine. With the repeal off the table, retailers and craft growers can breathe a bit easier about sales and licensing stability. Beyond the politics, cultural coverage, stories about sun-grown farms and recovery, keeps interest in craft and differentiated product alive, which is positive for certain segments of the market.
And Pennsylvania is still stuck. What does that mean for investors looking at that market?
Pennsylvania is a classic case of upside in limbo. The governor is pushing legalization again in budget talks, but the legislature remains stalled. That means a large potential market stays on the sidelines. If you own names that were counting on Pennsylvania to drive future growth, that timing uncertainty should be part of your risk calculation.
Given all that, what practical steps should listeners consider right now? How do you position ahead of trading on Monday?
First, map your state exposure. If you have concentrated positions tied to one or two states, decide if that fits your risk tolerance. Second, consider diversification tools. Broad industry ETFs can smooth single-state shocks, but they still react to major headlines and fund flows. Third, be ready for headline-driven moves when markets reopen. Monitor legislative calendars, emergency sessions, ballot signature updates, and any court appeals. And finally, factor in tax and transaction costs before making changes. If you can't tolerate more policy-driven volatility, trimming may make sense, but do it thoughtfully.
Which specific funds or companies should listeners keep an eye on as early indicators next week?
Watch the Advisor Shares Pure U.S. Cannabis ETF for flow signals, and then some of the big operators like Trulieve, Green Thumb Industries, Curaleaf, and Tilray Brands. These names tend to show sensitivity to state outcomes and investor flows, so they can be bellwethers for sentiment once trading resumes.
Quick timeline check. What are the immediate catalysts to watch for over the next few days?
Look for any emergency legislative action in Arkansas, implementation details or enforcement guidance in Florida, signature count updates or renewed drives for ballot initiatives, and any court filings or appeals. Also watch licensing notices in states like Maine where the repeal risk has receded. Those can lift near-term sales expectations for craft operators.
All right, Josh, let's wrap this up. Give our listeners 2 or 3 quick takeaways they can act on.
Number 1, policy risk is front and center. State courts and legislatures can change the picture fast, so map your state exposure. Number 2, diversify exposure if you want to reduce headline-driven swings. ETFs smooth, but don't eliminate risk. Number 3, watch specific catalysts, emergency sessions, signature counts, and licensing notices, because those will move sentiment when markets reopen.
Great. Those are tangible. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks for listening, and Josh, thanks for joining.
Thanks, Sydney. Sydney, talk soon.